Right. I don't have any specific market in mind, but I just want us to look at the markets together and then we see how we are going to analyze them. All right. So the other time we talked about market range, and then I mentioned it is very important that you understand market range because it tells you where the market is trading to, and it tells you where it is trading from. You are able to tell when you are, what do you call it? You are trading in line with the direction, and then when you are trading against the direction, okay, or the trend. It's very important we understand them. And then I gave some criteria that the market must meet for a certain level to be considered as what a high or a low. Right. So if we look at this market, if we look at this market, judging from the chart that we have here, again, this chart is limited. It's only up to I think just last year. It's up to April last year. So we don't have I'm sure that there should be chart dating into even 2019 and co. So if we have the whole thing, that we will know exactly where the market is at the moment, then we can make what do you call it, more informed decision. But now this is limited. But if you are going to analyze the market based on what we have here, then we have that the market is in an uptrend, like all of us can tell. We have price breaking this previous high here. There is a low right below our high that was not tested when the market was going up, right? When this low was formed, market didn't come back to it before it broke the high. So we would anticipate, okay, this is just a projection. This is what we are thinking. That's okay. Because the market is an uptrend, it will continue to go up. But at what point will it, resume the buy again? So we are expecting that the market will drop, it will continue to drop, and then it will come back to this zone. And when it comes to this zone, we expect that the buys will resume from here. And then the target is that it is going to take out this high to create another high so that, the uptrend will continue like that until the market finally switches direction. But looking at the data we have here, that is what we would project, right? Now, does this mean that the moment the market comes to this zone, we should take a buy? This takes us to what I was talking about. No, you don't take a buy because we have said the market is in an uptrend and this is the previous low. We're expecting the price will come back to the low and then the buys will resume from here. We don't just do that. When the market gets there, one, we are going to look at the nature of the bearish candles that took us to the low. It is important. It is very important that you look at it. You look at the nature of the candles that took it there. Then look at the behavior or the nature of the candles around the level. What happened to the candles? Did the candles start losing momentum? Because remember that like it is going to drop in value before we get here. So we are going to see bearish candles. The size of the candles, did they begin to lose momentum as it approached the level? If they are losing momentum, it is telling you that the buyers are preparing to enter the markets or the sellers are losing their power in the markets. Okay. All these give you information on what to expect. We are not saying the moment it hit this, you should take a buy. No, if you keep on trading like that, you are going to lose most of your trade. And then also, it is not only you that is expecting the market to buy from here. It means there are many buy orders here. That is it. There are a lot of buy orders here. A lot of people are expecting the market to buy from here. And this is when the market tends towards misbehave. What most of us refer to as what manipulation. So it is very likely that the market will liquidate this level before it will buy. Because there are lots of orders here, it will not buy straight out. It is straight up, right? It is going to play and toil with us before it will eventually go in your direction. So if you are not patient enough, then you find yourself wanting. I'll show you a typical example of what I am talking about. I'll show you something like that happened on one of the markets. We'll look at it. Okay. So we are analyzing the chart on the 24-hour time frame. We are going to wait for market to get to this level. When it gets to the level, then we will buy from here. Now, when we are buying this way, we are trading in line with the trend. Now, if that is the case, does it mean we should wait until the market gets here before we enter the market? An experienced trader may hop on this sell opportunity. Okay, so when they find sell confirmations, when they find sell confirmation, they may join the sell until the market gets here, right? Then they wait for buy confirmation and then they join the buy from here. I hope you get that, right? But then if you don't really understand what do you call a correction and then what do you call it? Expansion. Okay. It's best you only trade in line with the direction. Okay. Trade in line with the direction means that you're only going to take advantage of the buy. This is very important. This is very likely to happen because you are not the only one expecting buys here. Remember, this is a zero-sum game. Some people are buying, some people are selling. At every point, there should be a balance in the market. It means that somebody has to lose for you to win. Understand it that way. That is why you should always be patient so that someone will lose and then you win. You understand that? Always be patient. Those who are not patient enough will rush into the market, blow their accounts, and then you will what? Go and gather that money. You gather that coin. That's how the job is done. If you rush all the time, you are rather going to give your money to the market and people will come and collect it. Okay, so be patient. The market is not going anywhere. That's what I keep on telling people. The market is always there. When you sleep and you wake up, you come and meet the market. There's never going to be a day that the market is going to be gone. But maybe then you are no more on earth, right? Yeah, the market is always going to be here. So there's no point in rushing at all. There's no point in rushing. All right, so I hope you get my point. I would rather wait for price to get here. Then it gives me signs that it is going to buy. That is only when I would enter the buy. So what are some of the signs that you can be looking up to? Okay. Right. So that is it. So I was talking about some of the confirmations that we may be looking forward to, right? So when the market trades to this point, you could be looking out for candles like, rejection candles. Now, when you start seeing rejection candles around the key level like this, it tells you that the sellers are losing momentum. That gives you an idea that the buyers may be preparing to take over the market. You may start seeing bullish engulfing candles, some buyers trying to swallow up the sellers. It also gives you an indication that the buyers are picking momentum in that market. You have to see these indications before you join the move. You don't just take a buy because we said when the market gets here, we are going to buy. So you buy. No, follow the candles. Follow what the market is doing. Okay, follow it. Don't try to create a scene for the market that this is what must happen. You cannot do that. Okay. So it's very important. Right. Let's look at this market. Oh, so I have looked at some of these markets before. So right now, this is in a downtrend. The market is selling, so it will be good for us to join the sales. Right now, we want to identify a range to predict where the market could sell from. So this was the previous low that was taken out. It was taken out here. Now we have another block above it. That's the supply zone, right? So I will just mark this and then I will hope that the market will what do whatever it wants to do, right? And trade into it and then sell. That is what I will be expecting. Okay. Again, this doesn't mean that the moment the market enters the zone, it's going to sell. We have to wait for confirmation. It's important. So mostly, the setup that we provide, it actually gives you a guide like where the market is likely to go. Now you have to wait for the market to confirm what do you call it, the direction that here we are going here before you enter. Now, if the when the market is approaching this level and then I'm seeing very strong bullish candles, I have to be careful because that momentum can easily break out from this zone. It doesn't matter whether it has been mitigated or not. It doesn't really matter. It depends on the momentum of the market. That is just it. So if I'm seeing strong bullish candles approaching this level, I have to be careful. So when it gets into the block, I'll still relax. So I was talking about some of the indicators that I'll be looking forward to before I decide on whether to enter the markets or not. One of them is the CRT that we have learned. Remember that in the formation of the CRT, there is a liquidity, there is a sweep. Market either takes out the low or the high of your candle of interest, right? So when the market has taken out these orders, it is likely that it will go in what your predicted direction. What I'm trying to say is that when the market trades into a zone like this, I would want to see a CRT confirming my sales before I sell. I hope you get that. I want to see something like that before I take the trade. So here is the thing. You need to have a system. A system is a collection of, your procedures or your processes. Okay. When you are analyzing the market, the things that you are looking forward to, those things, you put them together and then you start to mark them. First of all, you want to see that there is a break of structure. You mark that, right? Then you want to see a valid order block to mark as your point of interest. There should be something like that. Okay. Then you check that. So follow all those procedures and check all of them before you take the trade. Okay. Before you take, okay. So I was saying that when the market trades into this block, then I'll be looking forward to maybe a CRT or what do you call it? An engulfing candle or a rejection candle, right? I'll be looking forward to those candles to confirm that, yes, we are about to go in the direction that we predicted earlier. It's not just the moment the market trades into the block that I'll enter the sell. No, that is not how I trade. And that's not how you should trade either. Okay, always wait for the market to give you a signal that I'm about to drop. I'm about to rise, right? Then you join. You're only following the market. That is your job. You cannot really give like a guarantee that the market should go in this direction. No, it's not going to do that. Okay, so we can continue. Like I said, if you have any question, you can put it in the chat box. I'll give you the chance to ask your question. Right. I think somebody posted this setup on the platform. It's Tuesday or so. And then he sent it like this. He sent the chat like this, and then he was taking a cell. Right now, if you send the chat like this to me, and then you ask me of my view or something, I may not be able to tell you anything because if you send me this, I'm not seeing enough information to give a verdict or anything like that, right? I need to see the full chat. And that is why Alpha, your question may be relevant here because if his chat was limited because of the devices he was using, then it's what a disadvantage. Because if you only send me this, what can I really say about this? I can't say much. All I can tell you is that there is a high here, there's a low here, right? But then you see there are a lot of information when I zoom out like this. And I can do this because I have a larger screen. In fact, I could do this on my phone, so it's not it wasn't a problem of the device. Okay. Now, if you send the chart to me like this, then I see that okay, so the market is trying to do something. When it was selling, it is in a downtrend, clear downtrend. But then when it was selling, it gave us something here, a key level. And this is what happened. Anytime the market traded to the key level, it sold. Anytime it traded there, it sold. Anytime it traded to the key level, it sold. So you see, price came back to the level. So ideally, by our human nature, we would expect that the market will sell. That is just it. And again, like I mentioned, you don't sell because it's sold from here. It has to give you an indication that it's going to drop. And look at it. This is the rejection candle. This candle gives you an idea that the buyers are losing pressure. Look at the nature of this candle that approached the level. Look at it. Right after that, it started diminishing. Look at it. Okay, then it gave us this rejection candle. And then we have this rejection candle tapping into the key level. Okay, so this tells us that the market may be selling from this point. So it is only after we have confirmed this that we can now start looking for entries. Then again, this is 24 hours, and we have already established that we are not going to trade or take any entry on the 24 hours. We don't have the funds for that. We need to translate it to the lower time frame, or we zoom to the lower time frame and then we find an entry from there. So you need a guidance. If you are switching from the 24-hour, when you go to the lower time frame, what are you looking for? So I can look for another block that aligns with this key level. Then I'll trade from there. And mind you, this we had a CRT here, but this range was very short. This one, I don't know if you can see it well. This one, I'm referring to this. Okay. So you see that this is the high, and then this is the low. This is the high, okay, and this is the low. And you see that it is a CRT that actually initiated the sell. I told someone that every major move that you have seen in the market, go and check it. Go and what do you call it? Verify. You will see that it was initiated by a CRT. You may not see it on the time frame that you are analyzing from, but move to other time frames, you will see it. You will see that the whole move was initiated by a CRT. That's why I told you the other time that even if you want to trade only the CRT, and we have already confirmed that we are going to win most of the trades. Of course, it's not going to play out all the time, but our losses will be small compared to the wins. And we have checked that. Okay. So if this is your system, then you can be sure of wins. So what I'm trying to say is that this is coming from somewhere. This sell is coming from somewhere. And then we have used the CR to confirm that yes, the sell has started. That is only when we are going to join the cells. So if you don't have the confirmations, you don't take the trade. If you don't have the confirmations. So after here, we cannot build our system. Like write down the things that you want to see, the things that you want to do before you take any trade, the things that you want to do. Write them down. That is the system you are talking about. Anytime you open the chart, check them. Okay, take a pen, be marking it. Okay, I've checked the trend of the market. I've been able to mark the right levels. Okay, I've spotted the CRT. I've spotted the demand zone. I've spotted the supply zone. Okay, there has been a break of structure. And then, make sure that all these things have been checked before you take the trade. So if you take the trade and then you lose, that is when you can easily investigate why you lost. You followed all your rules, yet you lost the trade. What happened? When you go there, you will find it. But if you are just trading randomly, because you took the trade randomly, you got a random loss as well. and then you cannot even verify where that loss is coming from. Okay, so you build that system for yourself, and then you see that the tree is going to change. Yeah, it's going to change. See, you can learn everything in this world, like all the strategies you can learn from all the big gurus and mentors that you know. If you don't define a system for yourself and follow it, you are never going to be profitable. Please, this is the hard truth. There is nothing secret here. Like there is nothing that you don't know. If you don't define a system and follow it, make sure you follow it, you are never going to be profitable. That's one thing that I've seen here. And that's the reason why most of us are not profitable, because we have learned from various sources, so many different sources. And so when you open the chat, mentor A said this, mentor B said that, mentor C said this. Now we don't even know which of what strategy to use, how to properly analyze the market. We don't know how to go by it. Okay. And then do not overcomplicate your chart. If I send you my chart, unless maybe I want to break it down for you to understand, but if it is my own chart, the maximum you will see there is two lines, my level of entry, and then maybe what do you call it? An arrow telling you the direction. That is all. But some people send me their chart, and I be thinking maybe they are doing graphic design or something like that. It's crazy. You get it? So keep it simple. That's just it. The more lines and then stuff you have on your screen, the more confused you are as a trader. Yeah, it should be simple and it should be clear. Right. So I believe that you are getting the point I'm trying to make. So we are not going to take a sell because the market has tapped a key level. We have to look for further confirmation, confluence. The market has to tell us that yes, the sell has started. And I always take you to class one, the basic candlestick, the engulfing candles that you learned about, the reversal candles that you learned about. They were not for fun. They were not for fun. They were telling you an important information. When you see them, they mean something in the market. They mean something. So many traders, especially the profitable ones, they will tell you that the moment that trading clicks for you, you realize that it was just the simple things, the basic things, support and resistance, reversal candles, chart pattern, those basic things. That is just what is going to save you. That's what is going to make you the money. All the other things are fancy words. They are fancy stuff. You know, we want to make the team voluminous. Now, imagine I've charged you $1,000 to teach you trading, and then I come and I teach you CRT for 3 days and say we are done. Do you think you will be happy with me? You are not going to be happy with me. So I have to find ways to make the lesson what voluminous a lot. Then you feel like, yeah, the $1,000, it was worth it. He has taught me a lot. That's why, they bring in a lot of words, a lot of terms, and what have you. At the end of the day, you still don't make money. But it's the simple things. Okay, that's right. What's the next chart? So we have this market here. And then for this market, I would want to show you something from what do you call it? C Trader. It's 25 1x, right? 25 1x. So this market, I posted it. If you had my contact early April, you realize I posted this chart, right? And this is where it's coming from. You see, you see where the sell is coming from, right? We have a CRT forming on the monthly time frame. This is it. A CRT forming on the monthly time frame. Again, this one, we cannot fully rely on this because we don't know the level from which it is trading from. The data is limited. We can't find the data from here. If the data was available, it could happen that this is trading from a very nice supply zone. And if that was the case, trust me, this cell can make us millions, a lot of money. Yeah, because we have a CRT, a confirmed CRT coming from what? The monthly time frame. So you break it down, you find either your weekly or maybe a daily somewhere. and then you pick it. So the reason why I was sure about the sell, if you remember, when I posted I don't know if it is still here. When I posted it, I came back to it and then I said that um, this is it, but I think I referred us to it. I said something that we shouldn't forget about the chart. Now, this is it. You see, I made the setup on April 8th. This is it, 8th. And look at when it started. This was what I think 17th. Yeah, 17th. That's when the sale actually took place. And this was the profit from one of our students that I shared with you. In fact, the person is on the call. Yeah, and it wasn't an easy trade at all. I'll share what happened on the chat with you. But I think I said something. That's what I'm looking for. I posted something like we still be looking, or it wasn't here. Because I said something about it. The thing is that when I did the setup here on 8, right, I kept on going back to it to check. And then I sometimes you can trade closer to it and then it will sell far from it. Then I was waiting patiently for this because I had seen that the sell was confirmed here. I hope you are getting my point. I had seen already that the sell has been confirmed from a higher time frame, so I was positive that the market was going to sell. That's why I was waiting for it. Okay. And so this is it. Very easy to analyze. It's just very, very simple. The sell that happened on the 4 hours. This is it. Okay. So on the 4 hours, this is the cell, a beautiful cell. But you see that it wasn't very smooth because when it traded into the block, we had a rejection candle, then a bullish candle. We had a beautiful engulfing candle, then went on to give us a lot of bullish candles before finally a confirmed CRT. Look at it. 4 hour CRT, confirmed CRT. And that's when the sale started. So remember what I said. You can investigate this. Every major move, just break it down. You will see a CRT in it, like a CRT initiated the move. Break the move down. You will see this. You will see. So this is the thing. If we had learned this earlier before the market traded into this level, we are not going to sell the moment the market enters the block, right? We are going to wait for confirmation. And if we are trading CRT, we can be waiting for a CRT. And mind you, the CRT may not form on the time frame you are waiting for. So you have to be checking on different time frame. I remember one of the trade I used 3 hours because it never formed on the 4 hour. But I saw a CRT on 3 hours and then I still used it, right? Because that was the confirmation I was waiting for. So you get my point. After checking the trend and everything, you know that the market is going to go here and then all that. When it trades into your zone, your level, right? Wait for the market to tell you that yes, I'm ready to sell. And these are some of the indications. See, right after the formation of the CRT, look at the sell was just beautiful. In fact, after the stress, the rest was beautiful. It was a lot of cash out, and a lot of people made money from this. But many people also lost money because of what happened here. Many people entered the sell the moment the market traded into the block. And so they lost because, this is 4 hours. So this thing here, there's a lot of pips. And then you can see that there was a liquidation as well. So price has taken out the orders. A lot of people sold from this level, but many of them took it in the middle. So their stop loss was right on the block. And you see the market cleared them. It took them out. Okay, so always when you find the level on a higher time frame, most of the time, wait for the market to liquidate the level before you enter. It is best that way. Okay, it's going to help you a lot. So I just want to believe that you understand the concept, what I'm trying to show you. I hope that you really get that. So is this the fourth example or something? So let me just show you one last, and then we'll take questions. Okay. So I just wanted to show you this so that even without me sending you setups, you can do it yourself. Do it, share it with me. Let us look at it together. Share it in the group. Let us look at it together. Okay. Especially my Nigerian brothers. You people are too quiet in the group for my liking. You don't share setups. I don't know whether you don't want people to judge you that your setup is wrong or something. Charlie, nobody's right here. Until it hits your TP, you are not right. You are not better than me. Okay. Yeah. So don't worry about that. Just do the analysis, share it with me or share it in the group. Let us look at it together and then let's trade together. It helps a lot. Sometimes when you do it alone, you swallow a lot of losses and then you become depressed. Some people give up and then all that. But when you do it together, it releases a lot of stress. Okay. So yeah, from what I have seen from the higher time frame, I know that this market is going to sell, right? And because we've already taken this liquidity here, I'm expecting that price to break this and then drop further. Okay, to break this level and then it will drop further. That is what we are anticipating. Okay, that's what we are anticipating. Right now, let's look at the last example, then I will take your questions. Okay, so we have 70 VIX 51x. Let's look here. And then I want us to look at it. Right, so on the 24 hours, again, the chart is limited. So we can only make judgment based on the information we have here. Now, based on this, the market is an uptrend. And remember, I think this for this particular chart, I've shown you. In fact, this cell, if you remember, I posted it. This cell is in the group. This one. Yes, I think I have to show you that too because so this was the cell. Look at it here. So you see that over here, I had different blocks. So I have a big one and then I have this smaller one. And then, I was suggesting this was the midpoint, right? Remember we said that with the CRT, we can target the midpoint. Yeah, right. So that was it. Now let's go and look at how that one also unfolded, right? Now we go to 4 hours. I think it was on the 4 hour time frame. Good. And then on 4 hours, this was the block of reference. This is the higher time frame level that I was looking at. This is the higher time frame level that I was looking at. So you see price traded, it traded into the block. I don't know if this will give, oh, there is no 3 hours here. So this was the market that I said I saw a CRT on the 3 hour time frame, right? But then you see market traded into the block and you don't just sell because it has traded into the block. It has to give you a lot of signs. And over here we had this nice sell confirmation candle. But there was a CRT on three hours. Yeah. There was a CRT on 3 hours and that confirmed the sell here. Yeah, that confirmed the sell here. So the point I'm making is that we have done the setup. We have marked the zone like this. And then like I normally do, I'll do something like this. I tell you that price will come here and then sell. We are not going to sell the moment it enters. Okay. The market has to tell us that I'm ready to sell. Look at it. You see that over here, it tapped into the block and it sold for a while. And look at this buy. This small buy here can claim your account, especially those of us with smaller accounts. Normally, when people ask me the minimum they can deposit, I laugh because that shouldn't be your goal. Okay, it shouldn't be the moment the minimum you can deposit. Ask for the recommended amount. The reason why I'm saying that is that you see, sometimes you have gotten the direction all right, but because your funds is small, the market will kick you out and go in your direction. So if you have enough balance, good capital, it will do whatever it wants to do. Remember, because this zone is the reference point until it goes out of the zone, we are still in trade. The trade is valid until it goes over this. It is valid. So if my account can hold, then irrespective of, the up and down that's happened here, I'll still be in the trade. And eventually, look at who went home smiling. You understand? So it should be about the recommended amount and not the minimum. I understand if it is your first time and you want to test the market, that one I allow it. In fact, me, this is what I tell my student. After learning, put $50 there. Use that $50 to test the market. That demo thing you were doing, it was just a joke. Trust me. You can use a demo to learn how to navigate the MT5, to know your way around because every now and then they are updating the MT5. You can use the demo to get to understand the system well. That is fine, but the market is more about psychology and emotions than a mere before and after charts, right? So you can only develop a good psychology when you are trading with your capital. You see how you feel when you are losing, and then when you are winning. That's when you can build a good, what do you call it? Emotions towards the market. So let us work on that. And I believe that the story is not going to be the same. So this is generally how I look at the market. This is how I look at the market. Right. So let me talk about 51X. So what am I expecting? This market is in an uptrend. And I was expecting that it will drop further before the buy. It may not happen because of what? The pressure that it built down here. Remember that when the market is consolidating or is ranging, it's building up momentum. And if it should break out from the what do you call it, the supply zone, it's likely to buy far, like it will buy for a long time before it will come down. Yeah, because of the liquidity build up here, I'm doubting it may get back down here. But generally, this market is an uptrend. That's what I'm saying. So if it breaks out from here, I'll look for buy confirmation and join the buy. Yeah, I'll look for buy confirmation and join the buy. That is my expectation or my bias on this market. I hope and then I believe that somebody has learned a thing or two. Now I'm going to give you the chance to ask all your questions. Okay. So if you have any question,